Morning, guys. Welcome to Coffee Chat. Oh my goodness, that is so good. You know, coffee on Monday morning is probably the best coffee you're ever going to get. I'll tell you what. And yep, there is real coffee in a real cup by a real fire that I actually put together. How about that? Wow, guys. I'll tell you, a lot of people are waking up today to some really scary news and they are just reacting like you would absolutely expect. The emotions in the space are going literally wild. And why are we seeing what we're seeing? And guys, this is why there's a lot of things going on in the broader marketplace. And one of them, of course, is you're seeing a 17-year high, guys. Get this on Japanese bond market right now, 17-year high. That tells you they are raising the interest rate there, the yield on those things, you know, and of course that is affecting the broader market with the carry trade that goes on there. But something else came out of Japan that is truly amazing. They are wanting to stimulate the economy. Well, you know what they're doing, guys? They are putting a flat tax on cryptocurrency of 20% versus the 55% capital gains that normally folks see in Japan. This is a big time deal. They are going to get out there, guys, and they are going to pump this marketplace. I absolutely believe it. Liquidity is coming. We are experiencing a major liquidity crisis in the markets. That is a fact, Jack. And of course, right now, you're getting a lot of knee-jerk reaction to it. And the market is literally shifting. Things have changed, guys. Judy and I, by the way, we are not big proponents of this whole 4-year cycle theory business. We are not. Because back in our run, when they were calling for December, it happened in April. Those guys missed it by 8 months. So we're not looking at that as a, oh, well, this, whole 4-year deal. Guys, I think that whole cycle theory deal is broken. Now, does that mean we're entering into this long-term bear market? No, I don't believe it. Yes, I do believe we are in a corrective phase of a bull market. But guys, I do not believe we're entering into a long-term, cold 4 or 5 year bear market because there are too many factors happening in the broader economy setting this space up for a monster move. And this is where so many people are letting their emotions get ahead of them. And they're absolutely going to get wrecked because they don't understand the space. They don't understand the volatility of it. They truly don't understand, the implications of how this technology is going to advance the global economy. They don't see the forest through the trees, guys. They're missing the whole deal. And as much as what you want to tell them, of course, they react. They react emotionally. In fact, you want to look in the comments. I've been looking in the comments and having to block more comments than I've ever had before because, they're just getting so frustrated, dropping F-bombs, doing this, doing that, and on and on and on. And I get it. I understand the frustration because we lived it. Judy and I were there. We know what it feels like to ride it all the way up. And by the way, to live through that bear market where things did come down for multiple years. But I'll tell you, guys, I don't think we've seen the peak of this particular run yet. And the reason I don't believe that, guys, is because we have watched Bitcoin dominance has not come back down. When Bitcoin dominance does drop down, and you see, and we're not talking price, we're talking dominance, where majority of the money that flows into this space is going through the rails of Bitcoin. Well, that usually turns over. And when that does, that has signaled every single alt season that we have ever seen in this space since the time we started recording, markets in the space. I think that was back from 2013. And we have not yet seen that, guys. And I do believe it's coming. And I do believe that when it does come, these assets are going to fly. Now, certain ones, of course, I think are going to do way, way better than others. And the reason is utility. And the implementation of that, guys, we're getting the regulatory clarity. It is coming. The ETFs right there. Do you know what the major whales are doing right now? I'm going to tell you, and you can find this out for yourself. You know how you find this stuff out? You can go on these various scanners like XRP scan or BitHump or whatever. And you can see the wallets. You can see how much they hold and all that. Well, you track that, guys, and there's folks that do. And we're watching these whale wallets accumulate like crazy, buying it up in the tens of millions of dollars. Now, do you think that they will go out and be doing that if they thought, oh no, we're about to fall over this cliff over here and go to the bottomless pit? No, they are not thinking that, guys. They are looking down the road. And they absolutely are seeing what's coming and the legislation that's going to come in, the clarity that's going to come in, all of those factors that are going to come in. But we are impacted by the broad market. There's zero doubt about that. And we know we're dealing with such political and financial instability in the wide world, which, by the way, is the very reason these distributed ledger technologies, were created in the first place, to solve a lot of these problems, especially the liquidity problem. And that's where we're at. We are right there on the threshold of coming to the rescue. Now, I do believe, and you've heard me say this, the disconnect between the market and the economy. And the economy certainly is in a lot of pain, but they are about to pump liquidity into this market, and it is going to be crazy, guys. They are going to start, again, I do believe, we are going to see this month, I think it's on the 10th, that the FOMC comes out, and I believe they are going to drop that rate again. And guys, I don't think it's going to be the only one. They're going to continue dropping it until they drop the whole thing to zero. Now, rumors coming out that Jerome Powell is about to step down. Now, we don't know that for a fact, but of course, that's the rumor that has been out there. And if that happens, I think even with Jerome Powell in there, the Federal Reserve has no choice but to respond by lowering the interest rate. They are going to do it. That is going to pump liquidity into the markets. Well, when liquidity comes in the markets, guys, what ends up happening? Well, of course, you end up seeing you see money moves into risk on assets when that happens, because it's looking for the highest yield. Now, right now, we have just watched gold spike, again, and the reason for that is because, of course, the uncertainty in the marketplace when you're watching all these things that have to go down. Now, something I want to throw out there is this. Guys, Judy and I, we do not leverage long, we don't short, we don't do anything. It seems like no matter how many times it has been brought out and we've seen it, so many people get wrecked doing that. And you're going to watch the numbers come out and you're going to see how many billions of dollars of crypto just got liquidated. You're going to watch that happen. Yes, you are. I believe it 100%. And it's because they've, gone in there. They put it on a 10x long or whatever it is and stuff like that, how they do it. And they just get decimated. Now, that is outright gambling. Of course it is. Because, a lot of people, they enter into this space. They're really just hoping to put in a little bit of money and multiply that significantly, and then out they go. And that is just not an investment mindset at all. And in fact, you're really just, you're banking, playing against the house when you do that, because you have to remember these major, institutions out there, these automated market makers, and what they do and how they, kind of manipulate the price and things like that. Because do you think it's because a bunch of selling happened? Yes, some selling happened, but a lot of it is a readjustment of the price due to the broader market economy. And there are definitely multipliers in that. Now, this being the biggest, probably the greatest risk on asset class there is. Yeah, we're subject to that volatility way more than others. Why would you risk that betting against the house? See, the thing to do is to get yourself really educated and to be able to understand these psychological markers in the marketplace. And by the way, how the broad market works and why that has impacts on this space the way that it does. And then to see the fundamentals of where we're going, you zoom out, and that's where you put your confidence. You do not put your confidence in the day-to-day rinky-dink price action. Yes, it's always great when you're seeing your portfolio up there, but remember, that's just an emotional high, guys. You don't see a return on your investment until you take that profit, do you? No, you don't. Watching your portfolio go up or go down, if you're not selling and all that kind of stuff, makes absolutely zero difference. So why in the world get your emotions all worked up to that? But a lot do. A lot do. They get scared, they get panicked, they make irrational decisions, and what happens? They get wrecked. And you've heard it said, bears make money, or I should say that bulls make money, bears make money, and pigs get slaughtered. That's what happens, guys. And unfortunately, it happens almost every single time because you know what? Psychology works, doesn't it? Because human behavior is so predictable. You don't want to be a statistic, do you? You want to get out there and you want to win, win, win. Well, you got to be strategic to do that, guys. You do. Absolutely, you do. Getting the right mindset in place, getting the right, all the various ducks in a row and doing all that. Guys, I encourage you to do it. Get out there and really research this stuff for yourself. Don't let yourself get all shaken up and shaken out. Now, I'm going to drop these articles right down into the description of this video where you can read about what's going on over there in Japan and why it's having an impact on the global market and why this market is reacting to it. But guys, I think some big time deals, some massive rallies are on the way when you least expect it. I believe that's when it does explode. I've seen it happen and benefited from it. And I do believe, now this is my 100% biased opinion, no doubt about that. But guys, we have it for a reason. And I'm just sharing that reason with you. And like I love to say, I can share with you our convictions. Cannot give you the confidence that goes with it. Guys, you got to get out there and do that for yourself. Now, having said that, we're going to be getting together with folks this week, signed up for our coaching. That's where you and I can meet that for that 1 hour over Zoom, one-on-one, where we absolutely take a look at your portfolio, making sure that that thing is balanced towards the achievement of your goals. We share with you different pitfalls that we fell into so you don't have to make those same mistakes as well. And we absolutely go over some amazing techniques that are really going to help you to succeed in this space. And I'll tell you what, if that's something that interests you, I've got some dates still available here for this week. You can actually get on there and visit me at thedigital.outlook.com, www.thedigital.outlook.com. And guys, you can get yourself on the calendar there. But I'll tell you what, we are seeing some major things happen and it is so exciting. So guys, until later on today when we have another fantastic video for you, have a fabulous one and take care.